Good evening, all. Welcome to Billionaire, another educational video. Hope yesterday's view helped you to stay on the right side of the channel. Yes, there was lots and lots of negative news. Even the global market fell, and today I don't know. As a retailer, you would expect that market will fall, but understand that the right way to trade is by following the pivots. Now, there are some what do you call logical assumptions which we make while trading in any kind of market. Now understand this assumption, whatever I'm teaching you, this is applicable to all the market, anywhere, any stock market across the world, because it's purely price action. What that assumption is, what was yesterday's candle? We had a green candle. And also in the video, I told you that expect there might be a gap up, our market will go. So gap up did not happen. And also I told you if it comes down to certain levels like Camarilla pivots, L3 or CPR, then it's a buying opportunity. Yes, watching the charts, I can always post that, yes, we had a lot of opportunity. This is how you have to make an entry, everything. But as a part-timer, how much I made today, first I'll show you. So I did again a very small trade today because market was going nowhere. It was overlapping candles, eating premium very slow. And since I have a day job and my other responsibilities, so I closed my trade here. In fact, overall, I should have made around 7.5K. Out of 7.5K, I lost around 3K, and then I called it a day. Now, why I went C? Remember, I keep telling you that I don't watch any news, anything. The reason being that no matter what news you follow, you need to understand when you have a full bodied candle, I'm talking about this one. When you have a full bodied candle like this, like this, like this, you need to understand this full bodied candle is green because there are a lot of buyers who are holding their position, right? And when you have a medium to a little larger size candle, those kind of buyers, I mean, as I said, market always have buyers and sellers, whether you want to call them smart money, retailers, or novice trader, whatever you call, they are buyers and traders. Now in this, you have all kind of buyers holding their position. Remember, we are trading in option, even if it is stock market. Consider this as a Apple or Amazon or Reliance. So here, for all these people to exit their position, they need to make profit, right? Otherwise, market should gap down below the low of this candle. When market breaks the low of this candle, what happens? That means below S1 or below previous day low. That is the reason why I keep telling in every video that expect or anticipate trendy moves above R1 or below S1, above previous day, below previous day low, and above previous day high. The reason being that most of the traders who are holding their position, their stop loss will be below previous day low or above previous day high. Wise for sellers and buyers. When this happens, you also need to understand if there was any strong negative news, market would open like this. You have a strong green body. Remember, based on this assumption, never gamble to carry a position. Most of the times I don't try to explain these things on the video because most of the novice traders tend to become over smart and they want to make more money. No, this is why I'm showing you. Based on this assumption, if you had carried your position, look where market opened next day. You would have lost all your money. Understand? So if there is a gap down, then you would understand that market sentiment has shifted and you can trade accordingly using the pivots. But today, where did the market open? The market opened almost where it closed yesterday. So all these buyers who are holding position yesterday will wait. The stop loss is not at hit. Remember, it might be, you might be scary that within few points your stop loss got hit, or you may tend to overtrade, or I may tend to overtrade. But remember, there are a lot of professional traders beyond you and me who have a proper stop loss. Some positional traders might have kept stop loss at R1. I told you 17,850. Below R1 would be the positional stop loss yesterday. So with this large stop loss, what is the reason for market to crash? No, only retailers watching the news will go just to burn their hand. Just a small tip how you need to trade, and that is the reason why I traded on CE side. So when you trade on CE side, what happens? Okay, now we'll come to this one later. Let me show you the Camarilla pivots. Okay, this is the Camarilla pivots. What do I say in Camarilla pivot? Where is the price? I'm going to make it very big for you so that you can see entire screen. I'll make it. This is H4 or R4 Camarilla pivot. The after H4, you consider it as a breakout, provided the previous day high is also broken. You can anticipate a strong move upside. Similarly, this is H3. H3 is what? Selling zone. What happened in the morning? Where did it come? To L3. What is L3? Buying zone. Market went, face resistance near the selling zone. After the selling zone was broken, it broke here, came back, but it did not go till L3. It took support here itself. See, this is a congestion zone. On top of morning, few candles took support, went up. This is where I entered. From till here till H4, there was, I think, around 35-40 minutes. It gave hardly around 11 points. By the time I exited, it was 9 points. Very slow day. Now watching this, you can think that there was a lot of money, but some days are like this. The candles will be moving, but the option premium kicks in, option Greeks kicks in, and it will be eating only premiums. Although you need to understand, okay, here, although I don't watch any news, you need to understand there is a lot of negativity within the market. Maybe my last year's COVID experience where market crashed. So a lot of people are anticipating a big time correction, but market is going up. But anyway, what will help you to trade or be on the right side of the market is how did the day candle close? Where did the day candle close? So you know that there are so many thousands or lakhs of people are holding. So for them to exit, their stop loss need to be hit. You can understand or make a assumption, educated assumption, this stop loss will be hit below L4. And if price sustains below L4, yes, you can expect a trendy move. So you can take a trade keeping L4 as stop loss or L3 as stop loss. This is how the trading works. But understand here also, see last level of resistance. You have two resistance, market went down. So, and make no mistake, when you watch this, right, I would like to quickly highlight few of the things for learning purpose. People who are getting bored and can exit. So last 3-4 days, I wanted to show you. So if you've seen my pivot 2-hour long video, I have shared some 4 candles with secret of pivot boss Frank Ochoa has shared in his book. What is the significance of this book? Or this? What do you see here? I always keep telling you, one is evidence where market has pulled down. These are big bars. And then this is a double top. Near this double top, what do you see? Wick to body engulfing candle. Okay, this is by experience. So market comes down. Near previous day low, what do you see? Reversal pin bar. Market moved very slowly, but see where it went. Almost 50 points. Now, if you find this near double top, near pivots, these candles are very, very powerful candles. Make no mistake, very powerful candles. Not the ideal pin bars, but you can see the long wicks. The long wick means there is a buying pressure. Not the ideal engulfing, but wick to body engulfing. Where is this getting formed? Near previous day high. Likewise, there was one more candle. Inside bars also act very strong. See, this market tried to pull back. We have a small inside bar here. People call it with various name, doji, harami candle or something. After a red candle, you have a small body green candle indicating pause in the price. After the candle closes above this, whether it's red or green, if you take a trade here, your stop loss will be here. You could make this much amount of money. Got it? How you can trade. Watch day before yesterday. Reversal pin bar forming near exactly what is this? L4. Yeah, I have got only, yeah, buy and sell zone L3. L3 exactly at L3 or R3. You can call it as R3 or L3, whatever you want. See S3. S3 support. Camarilla reversal pin bar. Market goes up. Whatever patterns you want. Evening star pattern, market from till here, not here. On daily basis, most of the folks get confused. From here till here, market has gone, you have an evening star, market comes down. Where do you have the smallest stop loss? At the top or at the bottom? Where do you have the maximum gain? At the top or at the bottom? So you need to think everything is a probability. Everything is a probability. Yes. See the evidence. Wick to body engulfing. First evidence, double top, you have an evening star, high probability. This has formed in between. I wouldn't advise you to trade this, but when you see an evidence like this, on 15 minutes evidence, I have told you, wick to body will act as a supply zone. Morning two candles where went down. Same way you have a reversal pin bar. Even in the last 30 minutes, you can scalp some points. How exactly you need to work? Wick to body engulfing. So I have explained this in detail. If you keep on going there, you can find out and you can trade only by using this. Engulfing candle forming near the S3 buying zone. What is S3? Buying zone. Of course, market never goes in a straight line. If you cue the stop loss here, it goes up, comes down. And when you find a reversal pin bar like this, first evidence, and then this, the middle small candle. This is always forming at the top is negative, but when it forms at the bottom, followed by a green candle, always market pulls back. See, buy, buy, buy. But don't buy this anywhere. Practice to buy near the pivots so that you have the maximum probability of making more money. Anyway, enough. This was an educational video where I'm bringing, I told you, right, I gave a hint yesterday. I'm going to bring you a price action educational video. So based on that, now let's quickly find out. So tomorrow we have a small bodied green candle, but the wicks are long. The close is not closer to the high, and the low, you know, what do you call this? Low is not closer to the low of the candle. Close is not closer to the high, and on both the sides we have a small wicks of considerable distance. So market is getting exhausted, but still, where are we? Where are we? We are above R1. I showed you yesterday. So as long as we are above R1 on daily time frame and on 5 minutes, 15 minutes time frame, your thinking should be wired to think only on the upside. Yes, there was a lot of negativity in the market, but who made money? Did going short by news or assumption made you money? Market was very tough, but did you make money by following the pivots, buying zones? So even if you follow, even if market is not giving, you will have less chances of huge loss. Now, since last 2 days, market is moving in this channel. This is 5 minutes time frame. If this channel breaks also, you can anticipate some good moves and by watching the pivot levels. And also make no mistake that we are in the within the larger time frame channel. If you see since December 20th, we are moving in the channel. So if it keeps continuing upside, yes, definitely it can go towards 18,200 or all-time high. But keep a watch that somewhere there will be some kind of correction because this channel is going almost sideways with lot of overlapping candles. The moment you see these overlapping candles, you should understand market is not giving enough money. It is getting exhausted because both buyers and sellers are fighting tough. Now, whoever wins that side, market will go and we will wait. Market will show us the direction to trade. Now, how did the levels work today? Okay, these were the levels I gave. Okay, this was a strong selling zone. Now market is above this, right? Yes, this will act as one support. Now this is broken. We said that if it sustains above 18,020, it should go towards 18,124. There's all possibility that before exhausting like a previous day, market can go and touch 18,130 to see if there are any buyers and then come down. See, this is what I was talking, small bodied candles, but it kept gapping up before the fall. Even downside, see here, gap up, gap up, gap up, gap up. Sometimes what happens is market is biased on the buyer side, it keeps backing up even with the small bodied candle. So if you are a, what do you call, and also you need to understand that, see, the long-term trend line is broken upside. So that's the reason you saw a couple of folks or few people more than the sellers, which took the price slightly higher. But always understand, market will show the direction. You tend to manage the neutral direction and trade accordingly. So when you come to the smaller time frame, this is how the market worked. Okay, I'm going to remove the pivots. And we don't need, I mean, this is something I don't use Bollinger Band, but it's a habit, old habits die fast. See, after breaking the 18,020 level, it is going sideways. Now we are closed at 18,055, other 70 points upside. Yeah, probably if it's a gap up 70 point upside, the target which I gave will be touched. If it sustains above 18,124 and 142, then you need to target 18,200 and above. But for some reasons, if market breaks previous day high or previous day low, then anticipate a sharp fall. How do you anticipate a sharp fall? Why do you need to anticipate? Because something has changed overnight and buyers and sellers sentiments have changed. That is how you need to analyze the market. So please do not mind if I'm talking too much. I'm talking too much only to help you guys how to analyze the market. So even yesterday I told you market will go up. It is not rocket science. Even you can analyze it. This is R1 pivot 18,103 and this is S1 pivot 17,986. So for tomorrow, the low of the candle is here. So 17,965. So if it breaks this, can market go down? You think and tell me, what do you see on the left hand side? Yes, market can go down, but this area is where market took support before going high. So ideally 17,950 is broken. Then you can anticipate market can go towards 17,900. This is all intraday levels, okay? And below 17,880, market can go towards 17,830. Okay, please understand 17,830. If you cannot see, these are the levels. Market should break not only S1 tomorrow, it also needs to break 17,950. If this breaks, maybe it can take support near previous day low, that is today's low around 17,964. Add another 15 points where you see a lot of congestion zone, because here a lot of buyers and sellers will be confused, and most of the people who are shorted might also exit their position, creating demand. Got it? So to kill the demand, if this congestion zone itself is taken out, 17,950 zone, market can go another 50 points down. Likewise, 18,100 is broken. Target 18,150, 124 to 150, above 150, 18,200. This is how you need to trade with pivots. Hope you like the analysis. If I'm talking too much, please comment so that I can cut short the video by talking less. Thank you guys. Have a good day.